We're moving into the late morning session on Wall Street, and the story this hour is a tug-of-war between resilient consumer spending, pockets of strong earnings, and some lingering caution signals under the surface. I'm Grant Mercer. This is Storm Stock Solutions, and we're here to keep clarity through the chaos of these markets. What's changed since the last update is leadership on the tape? According to reporting from MarketWatch, Carnival is back in the spotlight after earnings, not just beating expectations on strong pricing and bookings, but also reinstating its dividend. That's a big psychological shift for income-focused traders who wrote off the cruise lines during the pandemic. It suggests that at least some travel and leisure names are seeing enough visibility and cash flow strength to start rewarding shareholders again. That's helping sentiment across parts of the reopening and experience economy complex. Another notable mover in the growth space, Nvidia. MarketWatch highlights an analyst calling the stock unusually cheap relative to the broader chip sector based on its historical valuation. The argument is that over the past decade, Nvidia has rarely traded at this kind of discount versus peers, and historically, that's lined up with strong forward returns. For traders, the key question is whether this is a genuine reset after the AI mania, or simply a pause before the next leg. Either way, it's putting fresh focus back on one of the core AI bellwethers, and by extension on semiconductors and high-end computing more broadly. On the risk side, there are two themes to handle with care this hour. First, consumer sentiment. Jeffrey Bartash at MarketWatch notes that consumers say they're in a sour mood, with sentiment near record lows at the end of 2025, even though their actual spending hasn't fallen off a cliff. That divergence can cut both ways. On one hand, continued spending supports earnings for retailers, travel, and services. On the other, if people feel bad long enough, behavior often catches up. Discretionary categories tend to get hit if the mood finally matches the wallet. That makes this a fragile backdrop for heavily consumer-dependent sectors. Second, that Bank of America sell signal we mentioned earlier is still hanging over the market. According to the BofA report, heavy inflows and broad participation in the rally have historically preceded sizable pullbacks. It doesn't guarantee a correction, but it keeps the conversation around crowded trades, profit-taking, and whether the year-end rally has come too far, too fast. Under the radar? There are a couple of stories I'm watching as potential setups rather than immediate catalysts. Jamie Lee at MarketWatch reports that the White House is preparing new drug pricing deals with major pharmaceutical companies aimed at lowering costs. If those details land later today, they could shift sentiment in pockets of healthcare, especially big pharma and managed care, depending on how aggressive the price concessions look. Housing is another sleeper theme. Arthi Swaminathan reports that existing home sales have climbed to a 9-month high as some sellers finally give in, cutting prices or becoming more realistic. That hints at a slowly thawing housing market. For investors, that can ripple into home builders, mortgage lenders, and home improvement plays if the trend continues. We're also seeing more personal finance stories around long-lived student debt and complex social security situations for older Americans. Those don't move the indices tick by tick, but they paint a picture of a consumer base juggling higher costs, long-term liabilities, and retirement planning. That structural pressure is something longer-term investors will be watching as they think about demand for lower-price alternatives, discount retailers, and financial services. Into the next hour, I'll be watching whether the strength in travel and AI-linked names like Carnival and Nvidia broadens out to the rest of the tape, how markets digest that sour consumer mood, and whether any concrete headlines drop on drug pricing that could jolt healthcare. And, of course, we'll tie this together for you into the closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,